Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news. Equity markets are under severe pressure today in extreme fear mode, and that is despite the current economic activity signals being relatively sanguine. First in the US, the widely watched ISM service sector PMI bounced back to expansion in July with a better reading than was expected. The new order component expanded. The companion S&P Market Services PMI told a similar story featuring rising output. And the Caixin Services PMI suggests the Chinese service sector picked up the pace of its tepid expansion, coming in better than expected and better than the official measure. In Japan, it was the same. Japan's service economy returned to growth during July, following a slight dip recorded in June. In India, business confidence rose in their service sector and it maintained its rapid expansion. But inflation pressures from this high demand are now showing through and a warning flag that they may not be able to keep up the pace. In another big economies like Brazil, their service sectors are also expanding at a positive clip. There are others like this, but you get the picture. But in Australia, their service sector is easing back, no longer expanding. New order levels fell. And of course, it'll be a sharp contraction in New Zealand when we get the July services PMIs here. Later this afternoon, the RBA will release the results of its monetary policy meeting today. A rate hike, talked about until recently, seems off the table now. A cut also seems unlikely as well. In fact, markets aren't actually pricing in a rate cut there until November. And that is in contrast to New Zealand, where a full 25 basis point cut is priced in for next week's RBNZ MPS, another 3 cuts by the end of the year. That is a sharp repricing by markets in just one day. And the US Treasury 10-year yield is now just on 3.77% and down 2 basis points from yesterday. But Wall Street has started its week with the S&P 500 down 3.2%. Yesterday, Tokyo fell an amazing 12%. Hong Kong was down 1.5%, Shanghai down the same, but Singapore fell 4.1%. The ASX 200 fell its own very sharp 3.7% and its worst day since the pandemic. But the NZX 50 got away relatively lightly with only a 1.5% retreat in Monday trade. And the price of gold will start today down $39 from yesterday at $2,404 an ounce. And oil prices are $1 lower at just on $72.50 a barrel in the US, while the international Brent price is just under $76.50 a barrel. And the Kiwi dollar starts today 10 basis points lower from this time yesterday at just on 59.3 US cents. Against the Aussie, we're down 20 basis points at 91.3 Australian cents. Against the euro, we're down 80 basis points at 54.2 euro cents. That all means our trade-weighted index starts today at 68 and down a sharp 60 basis points. A sharply rising yen had influence on this too. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.